Hello guys, the forensic one back yet again with another epic video um, with regards to market structure. So right here with us we have an interesting pair, eurnzd, and this is a monthly chart. As you can see, this is a monthly chart structure. So basically we are doing a composition of market structure videos. So this is part 3. If you haven't watched part 1 or part 2, please you can go back and check out those videos, because this is gonna be a little bit complex today. So thank you for coming back. To my subscribers and those who haven't subscribed yet, kindly hit the like button and the subscribe button. You can hit the notification button so that you don't miss out on any other video that I'll be making. And after you've watched the content, please drop a comment and also share to someone. Okay, so right now I'm looking at a bullish market structure. A bullish market is a market that consists of higher highs and higher lows, as you can see. From this origin, the low, this is the high, a higher low, then we have a higher high. This low is a bit lower than that, but market kind of made a consolidation here. This is why I've boxed it in brown. This is a consolidation. So our original low will be this one. From this low we have a high, so the original low is this one. This is just a noise in the market. Okay, so we take this one and then market makes another higher high. From the higher high made, market drops, makes a higher low, but fails to make a high higher than this one, and then it posts another lower low. And as we can see right now, the market failed to make a high higher than this previous high. Okay, so right now last month we failed to make a higher high higher than this one, and we see that last month was bearish, so we expect this other market to also be this month to also end bearish. So our point of target is the liquidity which is drawn right down on these lows. Right below these lows, that is liquidity. Liquidity is the willingness of the market to buy or sell. The willingness of the market to buy or sell, that is liquidity. That's in my simple terms. So right on this line there is the willingness of people to buy. Okay, there's a willingness of people to buy. From here there are people who are looking at this market. Once it touches here, there will be some bullish pressure, or market will break this. Retail knowledge will take this as a support level. So we are seeing this month, and we are hoping that this month trades into this level. So right now our level of interest is that price there. If you've done quarters, if you are conversant with quarters, you will understand that market moves in quarters. Okay, so I'll reproject this price to 62750. So we have 62750, the zero there, 62750. So we are looking at price coming to that place right there. Okay, so since today we are not looking at quarters, I won't be able to explain in depth, or I will not even explain it. Yep. So let's go down to our load time frame, but before we do that, this is what I want you to see. Market block structure right here, this last higher low, market block structure there. It made a retest on this structure just here last month, a few months actually, like 1 2 3 4 5 6 months. It's been trying and struggling to pull through here, but it hasn't managed to no avail. So it has to come back in an area of liquidity or support to get more pressure, so that we can see a move up, or we go down, but without having to waste much of our time in looking at other price levels here. Like here, there's a level of liquidity, so it is advisable for us to not to not overdream or over exaggerate our points. So it's better we take a step-by-step measure. So I can simply say that the market is dropping maybe to this low, but how many months is it going to take for it to reach this low? So for now we can stick to this range, which is like if we get the price in blue and the price in red, we try to subtract from it. Here we have a 5, there we have 7 8 9 10 11 12 13 14 15. So we have about 85 pips. 85 pips already. Here there is a 5 minus 2, that is 3, so 350 pips. Yeah, 350 pips. So we are looking at a range of about 350 pips. It's a lot, my guys, it's a lot. So let's see how we can capture this. So before we leave, we take note: 1, there's a break in market structure to a bearish side. Number 2, we have a struggle. Okay, a registered struggle for the market to go high. So the only alternative it has is to go 300 pips down into an area of support, and then from there we'll see what happens next. Let's go to a weekly chart. So a weekly chart is safe, as you can see. Everything looks well set.